Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SLM Corporation Annual Report. SLM Corporation offers a range of financial services to support students and their families in financing education costs. The company's primary business involves originating and servicing private education loans to individuals in the United States. In addition to its core lending business, SLM Corporation also provides retail deposit accounts that offer competitive interest rates. These include high-yield savings accounts, money market accounts, and certificates of deposit, which allow customers to earn interest on their deposits. Furthermore, the company offers interest-bearing omnibus accounts, providing a convenient option for individuals to manage their finances. Overall, SLM Corporation's diverse range of financial services makes it a one-stop shop for individuals seeking education, financing solutions, and retail banking products. The stock price of SLM Corp. Slm has dropped by over 24.85% in the past year due to several significant events and factors. The main cause for this decline was the investor forum held in December 2025, where the company presented profit forecasts for the years 2026, 2027, and 2028 that were significantly below analysts' expectations. This led to a sharp drop of over 16% in Slm's stock price on December 9, 2025. The management's prediction that profits would decline and only recover in 2028 caused concern among investors. As a result, several analysts downgraded their ratings for the company's stock. Morgan Stanley reduced its rating from overweight to equal weight and lowered its target price, citing concerns about higher-than-expected expenses in 2026 and 2027. Compass Point also downgraded the stock from buy to sell and significantly lowered its target price. Other contributing factors included a general market volatility that affected investor sentiment and an increase in delinquencies on loans, which rose to 4% of outstanding loans compared to 3.7% in the previous year. The company's forecasts also indicated net write-downs between $345 million and $385 million in 2026, signaling a credit normalization. Additionally, Helix Partners Management LP sold its entire stake of 200,000 shares in SLM Corporation in February 2026, valued at approximately $5.54 million, indicating a risk adjustment after a mixed fiscal year. Despite these declines, some reports suggest that the company's fundamental data remains solid, with high return on equity and attractive price-to-earnings ratios. The company has also approved a new share buyback program. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. One major driver is the number of originations, which refers to the amount of new loans being issued. In this case, the company's revenue growth was driven by $7.4 billion in new private education loans originated in 2025. Another significant factor is the company's market position and diversified product offerings. A strong market presence allows a company to capture a larger share of the market, leading to increased revenue. Additionally, offering a range of products can help attract more customers and increase sales. The cost of attending college also plays a crucial role in driving revenue growth. If the cost of education increases faster than family income, savings, federal lending, and scholarships, more students and families may rely on private education loans. This trend is expected to continue over the next several years. Finally, changes in government policies can also impact revenue growth. Reforms to the federal student loan program are expected to increase demand for private education loans, leading to increased revenue for companies that offer these types of loans. The net income of a company has shown a significant increase over the past 3 years. In 2023, the net income was $563.6 million, which rose by 4.6% to $590 million in 2024. The most notable increase occurred between 2024 and 2025, with a jump of 24% to $729.1 million. The profit margins also experienced an upward trend during this period. In 2023, the profit margin was approximately 4.83%, which decreased slightly to 4.57% in 2024. However, by 2025, it had increased to 5.28%. This improvement in profit margins indicates that the company has become more efficient and effective in generating revenue. The increase in net income and profit margins suggests that the company's financial performance has improved significantly over the past 3 years. The significant jump in net income between 2024 and 2025 is particularly noteworthy, indicating a substantial improvement in the company's bottom line. The question remains whether the company is generating positive operating cash flow. Unfortunately, the extracted summaries do not provide a clear answer to this question. The financial statements provided on pages 7 and 30 of the report only include revenue, net income, and total assets for the years 2024 and 2025. However, these figures alone are insufficient to determine whether the company is generating positive operating cash flow. Operating cash flow is typically reported as a separate line item in the cash flow statement, which is usually included in the financial statements section of the annual report. To accurately assess the company's operating cash flow, it would be necessary to review the actual cash flow statement for the fiscal year ended December 31, 2025. This document would provide a detailed breakdown of the company's inflows and outflows of cash from its core operations, allowing for a more informed conclusion about whether the company is generating positive operating cash flow. Management at SLM Corporation is cautiously optimistic about the company's future prospects. Despite expecting college enrollment levels to remain relatively flat over the next several years, which may impact demand for private education loans, management has been able to increase origination of new private education loans by 15% in 2025 compared to 2023. The company's loan portfolio remains strong, with a gross balance of $21.7 billion as of December 31, 2025, and a significant portion of the remaining maturities being after 5 years to 15 years. Management has also maintained an allowance for credit losses, which was $1.43 billion in 2025, up from $1.35 billion in 2023. To mitigate risks, management has implemented a risk management framework that identifies, assesses, and mitigates risks such as interest rate risk, credit risk, liquidity risk, and operational risk. The company has also amended its secured borrowing facility to increase the maximum borrowing limit to $2.5 billion and extend the maturity. Overall, management's strategy appears to focus on managing risk, maintaining a strong loan portfolio, and adapting to changing market trends. With net income of $729.1 million in 2025, up from $590 million in 2024, the company is reporting improved financial performance. The acquisitions and divestitures made by the company are notable transactions that have shaped its business landscape. In terms of acquisitions, there is no mention of any significant purchases or mergers in the provided extracts. On the other hand, the company has undergone several divestitures. One notable example is the sale of approximately $1.29 billion worth of private education loans to a strategic partner on January 28, 2026. This transaction marked a significant shift in the company's business strategy and portfolio. Another instance of divestiture was the discontinuation of the parent loan product in December 2021. This decision likely aimed at streamlining the company's offerings and focusing on more profitable or high-demand products. Overall, these transactions demonstrate the company's adaptability and willingness to adjust its business model in response to changing market conditions. Slm's dividend policy, Slm, has demonstrated a commitment to returning value to its shareholders through its dividend policy. The company has paid quarterly cash dividends on its common stock in recent years, with a consistent dividend rate of $0.13 per share for the fourth quarter of 2024 and 2025. This indicates that Slm prioritizes sharing its profits with investors, providing them with a regular income stream. That concludes the financial summary for SLM Corporation. Feel free to comment below, and I will be happy to answer them when possible.